Welcome to our podcast. We're attorneys practicing as such at SchoemanLaw Incorporated, based in Cape Town and Paarl in South Africa, where we proudly serve the legal needs of the entrepreneur. I'm Nicolene Schoeman-Louw, and I'm joined by my colleagues Robyn, Shephard, and Hendriks. Thinking about selling or merging your business, let us unpack some of these insights. Ross, what is the first step in preparing for a sale or merger?
Thank you, Nicolene. I think the first step for preparing for a sale and merger is to conduct a comprehensive due diligence review. This involves evaluating the business financials, the legal and operational aspects to identify potential risks, liabilities, and the areas that may require improvement. Key elements include reviewing financial statements, tax compliance, employment contracts, intellectual property rights, and any regulatory or licensing requirements specific to the industry that you intend on entering into. Properly organizing and documenting the company's records ensures transparency and builds trust with potential buyers and merging entities. I think it is important that buyers and partners need transparency and a clear view of the business's health before entering into any sale or merger. And where you lack any uncertainty, I would suggest consulting with either a legal or financial advisor in the early processes to ensure that there is compliance and that we all have an understanding of the process. If Robyn, you can advise us what is an often overlooked aspect of preparation?
Thank you so much, Ross. Stakeholder alignment is key here, and we want to ensure that employees and shareholders understand the changes and, of course, are on board with all of these changes. And any form of miscommunication can really derail the process. And it's really advisable that in the early process of a potential merger or sale, that any key employees are made aware of this. They're involved, as you definitely want their input of that as well. So it's really to just ensure that communication has been kept abreast and everybody knows what is going on throughout this process, and that they understand the impact of this. That's really important in this process, and that's often overlooked as well. On that point, Nicolene, can you tell us how can a business attract better buyers or partners?
Thank you so much, Robyn. I fully agree with all the insights you've both shared. I think preparation is key, as with most things in our industry and most things that we advocate at the firm. Preparation is really key here. I think as a business owner, we need to know exactly what it is that we are seeking to sell. What is the asset? Going deep here, is it a client base or relationships? Is it machinery? Is it a combination of both? Is it a good methodology? Or is it all of that? So I think we need to know exactly what we are putting forward in terms of a sale, or forward in terms of a merger, or forward in terms of that partner which we seek to take the reins with us and to go to the next level. We need to be very clear on what the asset is, in other words. We need to make sure that all our boxes are ticked and our ducks are in a row. There's really nothing more embarrassing than for you to go into a due diligence process or being the subject matter of a due diligence, and all of a sudden some of the things you said when you were trying to negotiate this transaction turns out not to be the case. It makes you, quite simply put, look bad. And ultimately, depending on the degree of the misalignment, it could even go as far as breaking trust, and you could actually lose a valuable business partner or a valuable opportunity to merge or to sell the business. And that, of course, has a cost implication. It has the effect of impacting the morale, because everyone was potentially excited about the prospect of this transaction, and now it's not happening, and it's kind of one person's fault, you know. So in simple terms, I think we need to be clear on what it is that we've built, what is the asset, what is it that we are seeking to sell or share in a merger scenario. Where do we want to go going forward? What does the future look like, particularly with other partners or merger happening? And for us to make sure that we walk the walk and we talk the talk, that there's an absolute alignment, that we don't create blind spots just because we haven't actually checked that what we are saying is actually the factual position. Reputation is key. There's a saying, trust and good reputation takes years to build in business and in life, and it only takes a few seconds to break. So I think going into that, knowing what we're selling and making sure that we don't break down the good reputation and the trust in the process is absolutely critical. So thank you everyone for joining us today. We really appreciate your time. Please like, comment, and share in the box below. If you have any questions or suggestions for us, please let us have them. And we look forward to seeing you in our next episode.